This is Eric Chen, co-founder and CEO of Injective Protocol. Injective is a layer 2 derivatives DEX that unlocks the full potential of borderless DeFi. So what are decentralized exchanges? Well, first of all, we can think of it from the counterparts, like the centralized exchanges. Well, for those, you can think of the Coinbase, Binance, and DEXs of the world. There's a centralized server that acts as a central hub of information and relays everyone's trading needs. It also takes custody of your tokens, so you have to trust that they will store your assets securely. Whereas for decentralized exchanges or DEXs, for example, Uniswap, 0x, and Curve, you take control of your own assets. All trades are settled in a fully peer-to-peer fashion, and in an ideal world, traders can actually communicate with each other and relay information in a fully decentralized fashion. Obviously, this has been done before with Uniswap and others, but it doesn't come without its trade-offs. So what does it mean for users? Well, for starters, centralized exchanges are definitely faster, liquid, popular, and generally more convenient. However, it has a lot of centralized risks, such as hacks, which we've seen from Mt. Gox and KuCoin, very high fees, which we've seen from, let's say, Gemini and Coinbase, and general regulatory failures, like what we've seen with BitMEX and also OKEX. As for decentralized exchanges, there are obviously drawbacks as well. It's slower, it has a higher slippage and poor liquidity. Sometimes it's extremely expensive due to gas costs, and in general, since the space is still being developed actively, it has a poor UX. However, there are some key advantages that DEXs have in general over centralized exchanges. For example, it has really strong regulatory flexibility. It won't be shut down by a centralized government if it was fully decentralized and community-owned. It also has an extremely diverse offering, and beyond that, it's also community-owned. So the exchange is built by the people for the people. So what are derivatives? Most people don't know about this, but derivatives are actually one of the most heavily traded financial instruments out there in the world. It's being traded as a financial security higher than stocks and bonds, and sometimes even combined. Simply put, derivatives are financial securities with a value that's reliant upon and derived from an underlying asset or a group of assets. This means that derivatives can be made out of any assets out there in existence. For example, let's talk about corn, which is actually one of the second most common commodity futures out there. Imagine you're a big cereal company such as Kellogg's, which makes popular cereal brands such as cornflakes. I want to make sure that I secure my price 1 year down the road. Currently, the corn is trading at $1, but I think that's going to go up to $2. So what do? I see that the futures price is trading at around $1.5. So instead of waiting and see where the price goes, I secure the price by buying a futures contract at $1.5. Now, the corn suppliers are more than happy to do this because it kind of generates cash flow, first of all, and second of all, more importantly, it secures their sell for the next year. So there's a bilateral agreement between these two parties, and both parties are happy and more safe for the next year. This is the fundamentals of derivatives. One interesting thing is that for derivatives, since it's being priced as a fraction of the underlying, or even as a fraction of the notional, it can be traded on leverage and people can get outsized exposure to those assets. So let's tie it back to crypto exchanges. Generally, the biggest avenue and biggest volume are happening on futures. For example, Bitcoin perpetual futures. And the greatest avenue out there in existence is generally Binance futures, BitMEX futures, and also OKEX and FTX and some other avenues. The curious thing is that those avenues are often being highly debated for their reliability, security, and often cause downtimes that are causing a lot of distress from the traders. It also has very low accessibility because they have to ban a lot of regions for compliance purposes. And in general, it has a very high fee as derivatives is the most profitable part of the exchange. But what about the advantages of a decentralized derivative trading? Well, for starters, since it's fully peer-to-peer and decentralized, there's a lot less censorship requirement for an exchange like that. And just in general, since the fee is distributed amongst all the stakeholders, it eventually flows back to the community themselves. So in general, it actually has a much lower net fees to the community than centralized exchanges. And oftentimes, you're going to see lower fees just in general. For something like derivative that requires a very high volume, DEXs are not the best infrastructure to support it. For example, AMM currently has very poor liquidity and very high slippage given the capital contributed to the pools. If we were to do that for a derivative market, the LP would be usually at a loss, as a matter of fact, and it would be extremely unfavorable for the traders who are looking to go leverage. So generally, for non-long-tailed assets, and mainly the popular assets, AMM models are not exactly the best solution out there. If we were to use an order book model, we actually fall short even more. Because if we use a centralized avenue as the order book, it becomes and operates just in the same way as any centralized exchange. They're forced to face the exact same restrictions such as region blocking, accessibility issues, and just in general, settlement issues. And since settlement actually still happens on-chain, on Ethereum, the trade turnover rate for market makers is much less favorable than any of the existing centralized avenues. So these are the problems we are setting out to solve. First of all, we want to eliminate gas fees because it's one of the biggest costs to trading on DEXs. Second of all, we want to make sure that the entire experience from order discovery, order matching, to order settlement is completely seamless and fast. So this way, the traders will not be scared away by the probabilistic settlement on Ethereum. And the last thing is, we want to make sure that the user experience is in class with the existing centralized exchanges, while ensuring that we're fully decentralized. Because if we compromise on centralization, then we are no different from a centralized exchange. So at the end of the day, the biggest question is, what does Injective bring to the table? Well, first of all, we've been working on this for the past 2 years to truly build an application-specific chain for decentralized derivative exchanges. We started off by ensuring that the entire order book can be maintained in a fully peer-to-peer way while ensuring instant finality. This way, the order book will never lose sync, even after a few blocks of confirmation. And second of all, we ensure that there are no gas fees whatsoever, because this way, there are no possible competition and front-running issues when it comes to security and operations of the exchange. And most importantly, we have a central limit order book model and a very fast settlement model. So this way, in general, we offer the same in-class experience for a general trader as any type of typical centralized exchanges. So at the end of the day, we bring the best of both worlds from centralized exchanges and decentralized exchanges and present to you Injective.
Smash that like button, hit subscribe, and don't forget to turn on your notifications. It really helps us a lot as we work to build our community and bring you quality content every week.